I guess my producer tells me we've also got the Tech Mahindra management online right now. So let's go across and hear what they have to say.
Marginally better. However, clearly it remains challenged. One of the offshoots of this crisis, which will benefit the IT industry, has been the strengthening of the US dollar somewhat dramatically in the last 1 month. From the telecom domain perspective, we have not yet seen a discretionary spend revival in our customers' base. However, the market opportunity to assist operators in achieving cost optimization and better efficiency through our managed service offering is still quite robust. Our growth this quarter is a function of our ability to capitalize on these opportunities. Coming to the numbers, this quarter we have maintained our pace of growth. In Q2 FY12, revenue was at $296 million, up 2.2% sequentially. On a year-to-year basis, our revenue was up 12% after adjusting the one-time revenue we had in the same quarter last year. Our EBITDA was at $45.3 million and PAT at $52.8 million. Our profit after tax includes Mahindra Satyam share of profit, which were at $22 million for this quarter. On the business side, our non-BT business continues to show good traction with sequential revenue growth of 6.9%. Our funnel in both Europe and North America is much more robust compared to what it was a few quarters back. However, BT revenue declined by 4.9% sequentially due to some of our projects ending this quarter. As we had mentioned last quarter, our largest customer, BT, has embarked on a re-tendering initiative. Large portion of our estate has been re-tendered. The good news is that we managed to retain and enhance our estate in BT. This would, however, have a near-term impact on the revenues and margins. We continue to be BT's largest SI partner, and we expect that we will be able to gain market share and revenue as and when BT embarks on expansion initiatives. The impact on the margins will be largely mitigated by certain optimization we would be able to do by changing our service delivery model with BT and the benefit we will get from the currency movement. Growth traction from emerging markets continued with a sequential growth of 15.9%. America with a steady sequential growth of 6.6%, and Europe saw a sequential decline of 5.3%. As we look forward, we do see sustained growth momentum in our non-BT business. Our investments in our capabilities has enabled us to grow at a steady pace even with headwinds in our largest customer. As we go forward, we do believe that not only will we continue to retain our share of BT business, but we will be able to secure more business from their new initiatives. With these brief comments, I would like to throw open the floor for questions. Yes. Yes, Kritika, we know you.
Okay, margins, sir. Could you give us a color on how the margins have fared this quarter? Has there been an impact of the BT decline on the margin this quarter?
Yes, the BT decline has had. Our margins have been impacted by a couple of things. One is the salary wage hike which has taken place, which was fairly significant as we go forward. Two, there has been a decline in BT's revenue, and we knew that was coming, and that has had, because it's not possible or even desirable to adjust your complement of staff almost immediately. There was an impact on the margin, and that is what explains the decline as we see it.
So EBITDA has come off by about 300 basis points, and which is what you would expect in a quarter in which the salary increases happen. Of course, what we've done on optimization and on the cost side has helped mitigate that to some extent, and therefore even some of the headwinds in our largest customer have got absorbed within that movement. As Vineet mentioned earlier on, as we go forward, there will be some implications from the BT retendering. However, again, growth from non-BT and the currency tailwind at the moment will help us kind of mitigate that. So non-BT business has grown 7% this quarter sequentially. And, you must look at that in the context of what has been happening in the telecom sector with various players. And, this trend in non-BT, you have seen us consistently sustain for many years now. And this quarter again, 7% in telecom sector is way ahead of what has happened. What has happened in BT is a mix of a couple of things, change in the kind of work they do, change in the estate, and yes, some commercial pressure. So, I don't have an exact number for you on the pricing side. In terms of volumes, the overall growth is 2%, so, it's flattish.
A couple of questions. One is that, how is the crisis in the Eurozone impacting your business model? The other is that, of course, 37% of your revenues come from one client, which is a very large.
Your first question is that how does Eurozone, the crisis happening on Eurozone, impact us? Really two factors at work, mercifully on the opposite side. Number one, the discretionary spend in the Eurozone is definitely coming down. Therefore, that is bound to impact business. But on the other hand, most of the telcos are under huge pressure to cut cost, and that pushes business towards India as a destination, and we have very good relationships there. So we expect it will be ultimately a wash or a marginal growth till this issue settles down, which we hope will sooner than later. How are we de-risking ourselves on account of this large BT exposure? By consistently having growth which is above the norm in non-BT areas. Remember, 5 years ago, BT was 80%. Today, the business from BT has grown by 4 to 5 times, and our percentage has come down to 37%, which means most of the growth has come from the non-BT side. That is how we intend to do it, and that is how we intend to progress.
Backside,
So if you look, if you're looking at numbers on a year-on-year basis, the movement in PAT is, yes, very significant, and that is because our investment in Mahindra Satyam is beginning to give us a return. So the Mahindra Satyam share of profits relating to our holding is included in the results, and that is kicked in.
So excluding Mahindra Satyam, what's the PAT investment?
I think, I've given you the EBITDA percentage, and, PAT you really have to look at after taking in your share of profits from your associate companies. Yeah. So as far as clients are concerned, it's been flat over the previous quarter. As you know, the telecom sector as an industry itself across the world is pretty concentrated. So it is never going to be a segment in which you get hundreds of clients, okay? Because there are a few large players in each geography. We are by and large present in most large telecom clients. In terms of what is going to be the implication on budgets, I think early days at the moment, but clearly the trend which is emerging is that people are concerned, people are worried about the overall economic scenario, and as a result of which discretionary spend will come down. But as Vineet was mentioning, there is also a huge pressure on them to optimize their costs. So within their spend, over time, we would expect more to be outsourced and offshored. And as we have demonstrated over the past few years, when business comes in telecom, because of our unique positioning and our capabilities in that sector, we would hope that we will get a disproportionate share.